Local index poised for gains today ahead of the interest rate decision, the JSE closing firmer yesterday, along with global markets as investors fixed their eyes on another key U.S. inflation report this week. FNB Wealth and Investments analyst Sithembile Bopela joins us now for an overview of what is driving local trade. As always, good morning. Let's start with that overview of how the local index and Rand are faring this morning ahead of the interest rate decision.
Very good morning. I think, there's definitely quite a number of things that are moving markets this week. It is a short week, thanks to the Easter holidays. I think volatility has sort of tempered, which is what you would expect in a week like this. And we're also about to wrap up the first quarter, excuse me. And some of the key themes that have been sort of driving markets from the beginning of the year, we are still seeing play out. But of course, as you mentioned, definitely top of mind. There are quite a few economic indicators or releases out this week, but I think top of mind is definitely, the SARB's interest rate decision, but as well as, the core PCE inflation indicator, which is the Fed, the US Fed's preferred inflation gauge in terms of its targets for, bringing inflation back within its own personal targets. I think those are definitely what's driving sentiments this week.
All right, well, Sithembile, you kind of led us in that direction. All eyes are going to be on the Reserve Bank Governor, Lesetja Kganyago. He's due to announce the latest interest rate decision today. What is your expectation?
So I think we're also in line with the market's general consensus that we're not expecting any changes at this round. I think, markets are still digesting the Fed's commentary from last week, which was seemingly quite hawkish, but we are anticipating, the SARB tomorrow. As much as we're not expecting any changes per se, I think the commentary from the governor is likely to be a key driver of sentiment in terms of kind of giving investors or giving the markets a gauge for what, monetary policy is going to be going forward. We are anticipating, that the SARB might start cutting rates towards after June or towards the second half of the year, also in line with what the US Fed is looking to do. And so I think, definitely the commentary and whether the sort of the hawkish rhetoric is maintained from the SARB is going to be, I think, a key element to look out for.
Yeah, I mean, we heard once there was going to be a start of a cutting, or at least the first cut, we would see the beginning of a cutting cycle. And I think that for many financially sort of overstretched households, this will be welcome news. Let's go to financial service provider Old Mutual. Now, they've reported a 26% rise in headline earnings for the year to end December. So talk us through those numbers.
Yeah, so those full year numbers, I think, were well guided by management. Adjusted headline earnings per share did rise by 21% year on year, which was in line with, the guidance range that was provided previously. And that we could see was bolstered by the increased investment returns, driven in turn by the higher interest rate environment. But also they did see a recovery in equity markets, which was positive for them. We did also see top line, the results from operations were also underpinned by strong growth in the new business volumes, and value of new business. And that was in turn driven by, continued market share gains across their segments throughout the year that we did see. I think the increased interim dividend from 28%, by 28% from the previous year to 32 cents this year, was a positive, but we did see the final dividends come under a bit of pressure, which I think was just one of the lowlights in terms of the overall results. But overall, I think management's outlook seems quite cautiously optimistic, which again is in line with our own expectations for easing economic conditions for the rest of the year as the central bank, looks to start cutting back on rates.
Well, let's talk about Insurer Momentum Metropolitan now. They also have an operating update for the 6 months ended the 31st of December 2023. Let's talk through their performance now.
So those were also well guided for normalized headline earnings per share, came in at the top end of management's recent guidance. So that was a positive for them. The results we did see come off of quite a strong first quarter, which was generally characterized by, they did see robust assets under management or AUM growth. They did also note, positive net flows and positive markets as, a strong underpin for that. They did see, mortality experience improve. And they also did mention a pleasing underwriting experience and also business sales momentum. And so I think generally, as I mentioned as well for Old Mutual, the high interest rates environment has been quite supportive of, an improvement in investment returns from the portfolio assets for momentum as well, which supported profitability overall, which was another highlight for them. I think they did also, management did mention that, new business volumes as well as profitability are focus areas for them. They did just cite that, the current levels of new business margins as well as, or rather just the current new business margins aren't at the desired levels where they are right now. So I think the focus on that and the focus on driving sales volumes and improving the sales mix will likely, improve or increase the value of new business for them. But the group, remains well capitalized with improving capital ratios. I think a positive for them, thanks to the earnings growth and the ongoing focus on capital efficiency. I think also for them, the increased dividend up 20% to 60 cents this period should also be welcomed by investors.